Well, good afternoon. I've been saying good morning for the past several hours to everyone as we started our virtual conference several hours ago. And it's now afternoon here in the Eastern Time Zone in North America. For those of you that are joining us from around the world, as I know that you are, my name is Kevin Vincent, and I am the senior contributing editor here at Mining Life and Exploration News, which is the sister company of Vertex, which is our exciting new virtual conference platform that you're participating in today. Now, welcome to the Mining the Abitibi virtual conference. This is a global event and it's been made possible by a number of great companies, including Alamos Gold, which we're going to hear from in just a moment. Other companies like Canada Nickel and Lakeshore Gold and Newmont Porcupine and Kirkland Lake Gold, just to name a few. We just heard from the president and CEO of Wesdome Mining. Some exciting news happening there. A neighbor that happens to be a mining neighbor of Alamos. So without further ado, ladies and gentlemen, please welcome our sixth speaker of the day, Mr. Jamie Porter, who is the Chief Financial Officer of Alamos Gold, a Canadian-based gold producer with a long-term track record of creating value for stakeholders through solid financial performance, low-cost production growth, and a company-wide commitment to social responsibility and environmental stewardship. With that, Jamie, Mr. Porter, the floor is yours, sir.
Thanks very much, Kevin. I appreciate the introduction, and thank you everyone for listening in to the presentation this afternoon. Look forward to providing an introduction of Alamos and taking any questions you may have at the end of the discussion. So I'll start just by introducing Alamos. As Kevin said, we're a Canadian-based intermediate gold producer. We do have diversified production from our three operating mines, two of which are located in Northern Ontario, and our third, our Mulatos mine, is located in Northwest Mexico. We've grown considerably since our founding in 2003. In fact, just 5 years ago, we were a single asset producer with our Mulatos mine in Northwest Mexico being our only producing gold operation. Since that time, we've completed two very significant acquisitions. We've acquired the young Davidson and the Island Gold mines, both again in Northern Ontario, and brought our production level up to about approximately 500,000 ounces per year. So over 2/3 of our production and revenues now come from our young Davidson and Island Gold mines. We directly employ over 1,800 people globally, with over 1,000 of those employees, and certainly more contractors coming from Canada, primarily again based in Northern Ontario. Our core values listed here are safety, teamwork, environmental sustainability, integrity, and commitment, and they form the foundation for everything that we do as a company. On this next slide, we show the location of our producing mines and our development projects. In growing Alamos into what it is today, we have focused on high quality, long life assets in safe jurisdictions. As I mentioned previously, we're on track to produce approximately 500,000 ounces of gold this year, again with 70% of that production coming from Canada. Another thing that sets Alamos apart from many of our peers is that our mines have relatively long mine lives, averaging 12 years between them, and that 12-year average mine life is anchored by an almost 10 million ounce mineral reserve base. This really positions us as a stable, diversified gold producer with an enviable political risk profile. On top of that, we have a strong portfolio of attractive growth projects, with our Lynn Lake project in northern Manitoba being next in the queue for development. This growth profile that we have is really what sets Alamos apart from our peers. Our pipeline of organic growth projects is expected to contribute to 50% production growth between now and 2025. We will be able to demonstrate strong growth while the rest of the industry is facing declining mine lives and rates of production. While we are focused certainly on growing with 50% production growth over that period, our margins and profitability will also improve dramatically. We're anticipating over a 20% reduction in all-in sustaining costs. This year, we'll average all-in sustaining costs in around $1,050 per ounce. We expect that to be at $800 per ounce in 2025 once we've completed the expansion of our Island Gold mine and once we've brought our Lynn Lake project into production. Our corporate strategy has always been very conservative and low risk. We focus, as I said, on safe jurisdictions on high quality assets, and we're very financially conservative. Maintaining a conservative balance sheet is what has enabled us to take a counter-cyclical approach to mergers and acquisitions. We have had the financial strength to acquire companies at the bottom of the market when many of our peers can't. We have a sustainable business model that supports increasing returns over the long term, and the results really speak for themselves, as we've delivered a 14% annualized return to our shareholders over the course of our 18-year history. I'd now like to move the discussion over to the first of our Northern Ontario-based mines, Young-Davidson. Young-Davidson is located in Matachewan, about 60 kilometers west of Kirkland Lake, Ontario, and it's one of Canada's largest underground gold mines with a design capacity of 8,000 tons per day. 90% of our workforce at Young-Davidson is local, and we're a very important employer in the region, accounting for approximately 15% of total mining employment. Young-Davidson also contributes significantly to the local economy, with over 17 million of economic benefit in terms of spending to the regional economy on an annualized basis. We have a 14-year reserve life at Young-Davidson with significant exploration potential beyond that. This will ensure that this operation continues to be a very significant employer and contributor to the local economy for decades to come. In 2020, we hit a very important milestone at Young-Davidson. We completed construction of the lower mine infrastructure, which has enabled us to increase our daily mining rates from 6,000 tons per day, where we've been operating for the last 4 or 5 years, to approximately 8,000 tons per day. This expansion has made Young-Davidson far more efficient, far more productive, given the mine and the infrastructure is more automated, and it will enable us to consistently produce in excess of 200,000 ounces of gold per year. And at current gold prices, that means in excess of $100 million of annualized free cash flow. Switching over to our Island Gold Mine. Island is located in Dubreuilville, Ontario, close to Wawa, just north of Sault Ste. Marie. This asset has really been a tremendous success story for us since we acquired it through the acquisition of Richmont Mines in November of 2017. When we initially bought Richmont and acquired Island, we had approximately 1.8 million ounces in total mineral reserves and resources. Since that time, we've added an additional 3 million ounces. At the same time, we've increased production by about 50%, going from what they were operating at in 2017, 800 tons per day, to our current rate of production of 1,200 tons per day. Island Gold is now approaching 5 million ounces of mineral reserves and resources. It's one of the highest grade and most profitable gold mines located anywhere in the world. Island Gold's also a very important employer in the region, accounting for 15% of total mining employment 22% of total mining employment in the Algoma region. And also, much like Young-Davidson, contributes significantly to the local economy with nearly 12 million of economic benefit accruing to the region on an annualized basis. As I mentioned, we've had phenomenal exploration success at Island Gold. And as a result of that and the expanding ore body, that's positioned us to be able to expand the operation. We're looking at investing in sinking a shaft and expanding the mining operation from 1,200 to 2,000 tons per day. This will bring average annual gold production from our current rate of in around 140 to 150,000 ounces a year to approximately 240,000 ounces per year, while driving all-in sustaining costs from current levels of around $750 an ounce down to closer to $500 an ounce. These are industry low leading costs of $500 all-in sustaining costs, and the gold price well north of $1,800 an ounce. We're generating tremendous margins at this operation. And while our existing phase 3 expansion plans for growth at Island are very exciting, we believe there's certainly more growth to come. The graph on the left of this slide really showcases the exploration success that we've had to date and the expansion of the mineral deposit over time, with the best, highest grade drill intercepts that we've ever reported at this project at depth and to the east, which you can see on the right-hand side of the slide. We believe we will continue to benefit from this exploration success, and that this deposit is going to continue to grow, and the value of the Island Gold Mine will certainly grow with it. Moving on, just a quick discussion on ESG. I mean, this has become a much bigger focus for our investors in recent years, but it's really It's not something that's new. It's been core to everything we do at Alamos since the company was founded again in 2003. It's a core part of our culture, as is our focus on continuous improvement. And I think this is evident through our track record and many of the initiatives that we currently have underway. We are always looking for ways to minimize our impact and reduce our footprint. If you look at the environmental heading here, you can see that our greenhouse gas emissions and water usage per ounce of gold produced are already well below both the intermediate and the senior peer average. These are metrics that we continue to look to improve with initiatives underway at each of our operations. From a social perspective, we're focused on a culture of safety first, and we're certainly seeing results with a 59% reduction in our lost time injury rate since 2018. We have a program we call Home Safe Every Day, and this drives everything that we do from a health and safety perspective. It's an area where, again, our focus is continuous improvement. We're always looking to do better. Within our host communities, we're always looking for ways to invest that will provide ongoing benefits well beyond the life of our operations. And we've been recognized in both Mexico and Canada for our efforts in this regard. Lastly, from a governance perspective, we maintain a very diverse and independent board and have built and continue to refine a framework to ensure accountability to all of our stakeholders. As I mentioned, a core value of the company is health and safety, and our Home Safe Everyday program. It governs our safety practices and our commitment to continuous improvement. I think our response to COVID-19 really exemplified our focus and commitment to safety. We were extremely proactive in 2020 in implementing procedures and protocols to minimize the impact of COVID. Early on, we hired independent medical advisors to support the development of new social distancing and related policies and protocols. We were one of the first companies in Canada to conduct screening testing of our employees to ensure that COVID stayed away from our mine sites. We conducted over 13,000 tests in 2020, and in so doing, protected our employees, their families, and our local communities. Many of our employees have now are now being vaccinated with on-site vaccination clinics. So we're very pleased to be nearing the end of the impact of the pandemic on our operations. With that, I'd like to wrap up the formal part of the presentation, and certainly be interested in any questions that anyone might have. I would like to close just by saying that Alamos is very pleased to have been able to focus our growth in Canada. As I mentioned at the start of the presentation, we transitioned from being a Mexican-focused single asset producer to now being an intermediate diversified gold producer with more than 2/3 of our production and revenues coming from Canada. So we look to continue to expand in Northern Ontario and in so doing grow the value of Alamos in the years ahead. So thanks very much. I'll turn it back to you, Kevin.
Yeah, Jamie, thank you so much. What a great comprehensive presentation that you assembled for us today. And you know, it's Alamos is certainly it's almost one of those quiet companies. You know, we tend to hear some of the bigger names in the Abitibi Greenstone Belt. But boy, Alamos is just it's just one of those companies that's there. It's rock solid, to use that perspective, or that particular phrase rather. So in terms of where you are at right now, one of the challenges that so many companies have, and I really haven't touched on this with some of the other speakers that we've had today, is finding the people that you need. How are you fixed for employees? Are you on the hunt for more?
We're always on the hunt for more. I mean, we have had 2 years back, we had pretty significant turnover across all of our operations as you know, the gold market generally started to improve. We found more competition for especially our senior roles. I think we're very satisfied, I mean, with the quality of the workforce in Northern Ontario, but the key is, you know, keeping your good people. We offer, you know, very competitive compensation packages, leadership training, skills development training. And I think really what keeps our best people at Alamos is just the culture of the company. It's really a meritocracy. Everyone is, you know, certainly encouraged to be proactive and to take ownership and work together to achieve best possible outcomes. So it's really a great place to work. I've been with Alamos since 2005. I never thought I'd be with one company for more than 5 years, and I'm going on 16. as have the majority of our senior management team and many of our employees down through the ranks.
It's certainly one of the great benefits of being a producer that is in this space, if you want to call it that, because the profit margins are there, right, in terms of the price of gold. To be able to treat people the way you said, where it's a great place to work, and you can provide the kind of culture and benefits that attract quality people. And of course, you're not the only gold miner in town, so you're competing with everybody else, which is a good situation to have compared to most industries.
Absolutely. And again, I go back to what we can provide to our employees. If you look at the data and statistics, I mean, we pay well above average market rates. So gold mining is a great industry to work in from a compensation perspective, but also with respect to just our health and safety and skills development training initiatives. I think there's a lot. A career in the gold mining space can be very, very positive, especially with current market conditions. And with a company like Alamos, we have the balance sheet such that the balance sheet and low cost structures such that if gold drops by $600 an ounce tomorrow, that doesn't change anything that we're doing.
Yeah.
We're not laying off employees. Our workforce is sound.
One of the things that you did mention about halfway through your presentation, you talked a little bit about that financial position that the company is in, and the opportunity for some mergers and acquisitions, without obviously pointing fingers or identifying any companies that are out there. How would you describe the company's appetite for that at this point? And obviously, it's typically in and around your existing properties.
Yes, yeah, I would say our M&A strategy has been a bit muted over the past few years as we've seen the gold price run up and valuations increase. That's typically when we kind of stand back and let others get involved in M&A. I alluded to it in the presentation. We've tried to take a counter-cyclical approach. We're very conservative from a financial perspective. We did our merger of equals between Alamos Gold and Orico Gold that brought in the young Davidson mine. We did that in 2015 when the gold price was around $1,100 an ounce. In 2017, when we acquired Richmont Mines, the gold price was just over $1,200 an ounce. So we've always favored the approach of having a strong net cash balance, so that if the market takes a turn, the gold price dives, we're in a position to be acquisitive. And that's worked out really well for us. So given that, we are not on the hunt currently. I mean, we've got a 50% growth and a 20% reduction in costs over the next 5 years with our organic pipeline. So there's really no need for us to look outside the company to do anything at this point.
So if the price of gold drops, we can expect kind of like a wolf pack. You can expect the Alamos hunting team to come out of the den and start having a look around to see what's out there.
Well, what's different with this most recent cycle is that companies across the industry are in better financial shape. If we go back 5 or 6 years, balance sheets were highly leveraged and stressed. I think there's been a lot more discipline by senior managements of mining companies to ensure that their financial statements are in good shape. So, if you do see a reduction in the gold price and a drop in valuations, I suspect it wouldn't only be Alamos on the hunt.
Jamie, thank you so much for joining us today and putting together a fantastic presentation to give us some really good insight into what's happening with Alamos. Very exciting company, important and very, I think, valued member of the Abitibi Greenstone Belt, if you will, and which is the focus of our conference today. So thank you so much for sharing this great insight today on the company.
Thanks very much, Kevin. Appreciate you having me. Thank you.
Our pleasure.